So let's understand what are the risks involved into mid cap and small cap. The major reason is a price volatility. Considering a lower base or institutional investors, the price volatility in these stocks are much more higher compared to a large cap stock. And the major reason is a low liquidity. Considering that, a lot of investors do not own them, the investor base is quite thin. The prices do get appreciated or drop drastically because of any positive or negative market news. Even they are susceptible to any kind of rumors because of the lower investor base. If I look at any institutional investor, whether it's of FII or mutual fund, they generally avoid small cap and mid cap because of the higher transaction cost. And because of the lower liquidity, the bid and ask spread, which is generally measured in impact cost, is also on a higher side. And all these costs lead to a higher transaction cost for FIs and mutual fund. Another issue is a financial transparency. Since these companies are small cap and mid cap, not necessarily all of them do have a big four like a ENV, Deloitte, or any other reputed statutory auditor as an auditor on the company. A lot of times, the financial transparency which the company needs to maintain with respect to a SEBI guidelines or disclosure agreements with BSE, NSE, they might not adhere to this kind of guidelines, leading to a lot of financial transparency or issue with the corporate governance. Corporate governance is one of the major issues with the small cap and mid cap companies. Small cap and mid cap company, they are being driven by a set of one or two key promoters who are important for the successful running of a business. A lot of decisions being taken by a promoter. Failure or exit of leadership can collapse stock, and any exit of those promoters or maybe a major KMP could result into stock price drop significantly. That's why it's very important to understand whether the business is being institutionalized, is it being driven still by a promoter, or they do have a corporate structure wherein they have enough qualified team of people who can run that business smoothly without the dependence on a promoter or a top KMP. Higher debt level is another major reason. Generally, all these small companies or mid-cap company do carry a debt on their balance sheet, which is unsustainable in the long term. And any kind of negative down cycle in their business could affect them significantly, increasing their interest cost. And in case of that, they might even close down their business because of the unsustainable debt levels that they are having. And most of these companies do get affected negatively by any interest rate changes, a currency shift, inflation, and policy market. All the global macroeconomic sensitivity do offer or do affect their business. Similarly, operational fragility. Generally, all these small cap and mid cap companies are particular geographic specific, and they do have a customer base in and around a particular geography. So any kind of business that affects a local market will affect negatively the performance of this company. Small cap and mid cap company, they are generally or heavily dependent on a one revenue stream or one product. So any negative impact on that particular product would affect the revenue of a company significantly. So that's why if I look at the business of a small cap and mid cap, they are more volatile, because of which the prices of those companies are volatile. So before you actually consider investing into small cap and mid cap, you have to first understand whether the business or the company is on a solid ground or not. These all issues needs to be considered before investing into a small cap and mid cap.